CNBC-TV18, embarking on a quarter century of excellence.
All right, let's shift focus now to the commodity markets. Manisha Gupta is standing by to tell us what's on her radar. Manisha, over to you.
Sonia, thank you for that. I'm looking at the crude oil prices where we have overnight markets, so that the prices are now trading at around 5 to 6 month lows. 4% down overnight, and we are down 12% now in the past 1 month when it comes to the crude oil prices. Well, the U.S. inflation data that's come in is now bringing in a probability of absolutely no rate cuts in the first quarter of 2024. I mean, that was a number that the markets were leaning on way too much, and that is out of the scene and is the reason you have seen that premium go off to the markets. So we are trading below $70 a barrel for the WTI crude and below 75 right now for the Brent crude prices also. Also, when you look at the OPEC and allies output cuts, since the kind of discord that they have, and this is something that the markets have been factoring in case of prices, that there could be still surplus in this quarter and the next as well. Add to that the EIA data that suggests that the U.S. output will continue to grow as we go forward. So 12.93 million barrels per day in this year and a higher 13.11 in the next year, which is an all-time highs. Also, markets are looking at record productions, not just in U.S., but in Canada and Brazil as well. So the non-OPEC crude output is expected to continue to grow in the next year as well. Even as there are concerns about Yemen Houthi attack on Norwegian commercial tanker, but the markets are in no mood to take in any risk news into the prices right now. It is all about lower demand, higher supplies, and which seems to be putting pressure on prices. EIA also says that they are now downgrading the Brent projection in sense of prices for the next year by $10 to $83 per barrel of an average for the next year. And that's the kind of statement you have seen come in from various other agencies as well. S&P Global is another one which says that 2024 demand estimate is down by 1 million barrel per day versus the supply growth. So you are looking at a surplus going forward into the markets. It also is about a lot of data watch that the street will watch out for. To begin with, it's going to be the COP28 negotiation that the markets has an eye on, which is still awaiting a new draft deal on phasing out of fossil fuels. And then it is about OPEC monthly report that comes in today. And most importantly, the US Fed meeting announcement will give direction.